Garrett, it's all yours.
Well, good morning, Mary and everybody. It's so nice to be here. Thank you for that introduction. I want to also introduce my team here. Veterans of them all. Michelle has been with us now recently, celebrating 22 years with us, which is unbelievable. I've got almost 40 years in the business, which is really unbelievable. And Brianna is actually a fourth generation in the agency. Grandfather started back in 1934, so it's great to have her on board as well. And so what we're going to try to do, and it's nice to be back, by the way. We did a presentation over in Goshen, I think back in January. So this is nice, a nice way to get out to a number of other folks who are part of Hudson Gateway Association of Realtors. So with that, just, a brief slide coming up here, John, if you can switch it, just a little bit about us, and we're going to really try to keep this tight into an hour and then allow for questions and answers afterwards. So I'm not going to belabor this, but what I would like to invite everybody to do is to look at Celia and Derlin. Please feel free to reach out to us. Use us as as somebody that you can rely on to answer questions, that sort of thing. We really invite all of you to use us as a resource. So please do that. We've been around a long time. We got tons of experience, and we'd like to share that, with folks as well. So with that, we'll jump right into this wonderful world of myths and misconceptions. We're going to try to demystify some of this stuff for you. This is salient here because home insurance. If I had $1 for every time somebody told me insurance is a necessary evil, I'd be a rich man. But it is certainly something that you can't live without. And this slide is a little deceptive because, in fact, nope, go back. I'm sorry, John. Because in fact, perils of flood and earthquake are not automatically included. Flood is a separate animal altogether, which most of you realtors, I'm sure, know and have the pain sometimes of having to deal with at the last 11th hour. Earthquake you can add to your homeowner's coverage, and believe it or not, there's a ramified fault line, which experts have been telling us for many years, could rise up and bite us. So you can add earthquake coverage to a homeowner's policy. Flood separate. But if you're unlucky enough to have a giant flying axe come down on your house, coverage, because there's coverage for falling objects. So with that, we'll move on. And one of the biggest misconceptions and one of the biggest problems that we have is the fact that, and this has been a fact for well over 20, 25 years, that property insurance, and I will say homeowners, including commercial property, business property, 60%, over 60%, are underinsured, undervalued. And the importance of this is critical at the time of a claim. Nobody wants to spend money on insurance, right? But the ramifications of being underinsured are significant. And the next slide kind of details, and I'm going to touch on something that my team is going to say, no, don't go there, but I'm going to go there anyway. It's not on here, but there is a difference between market value, which you folks deal with all the time, right? It's all about market value, to new construction costs, building a house brand new, digging a hole in the ground and building it new, to restoration or having to rebuild a home after a claim. And so the importance of making sure that you're insured to value, and part of what we do is we have some third-party software. Our companies will help us. We have a number of companies with whom we deal with as an independent agency. And they help us try to, nail down where 100% insurable replacement cost is. One of the biggest factors is, of course, when rebuilding, you have cleanup costs, you have debris removal that can amount to tens of thousands, if not six figures, in a nasty claim on just a moderately sized home, and that's factored into those values, right? I think the only time that I can remember where it was flipped, where market value was actually higher than insurable replacement cost, was that bubble back, as some of you might remember, back in 2005, 2006, where oh my God, I mean, homes were selling for, we were dealing with, right, Michelle and Bree, we were dealing with banks. Well, I should say Michelle, not Bree. We were dealing with banks saying, hey, you have to insure this home for $600,000, and it's like, well, the insurable replacement cost is $475. So how are we going to do that? So, but more often than not, really for the last 15 years at least.
The other exclusions are such as landslides and sinkholes. There's no coverage for that. A common question we get is exclusion that is on the homeowner's policy is wear and tear. So if you have, for instance, an example, your roof is like 30 years old and it just starts leaking, and a lot of clients will say, oh, my roof is leaking. But most of the times, if it's got a life expectancy of 30 or 35 years, that's considered wear and tear with no particular cause of loss that has just deterioration. So that would be excluded. A homeowner's policy is not meant to be a maintenance policy. So it's very important for you to be able to keep up with the maintenance of the homeowner's policy. Other exclusions are infestations, bed bugs, termites, mice. If they get into the house, they're not covered. Civil authority, also mold. There are some limited coverages available on certain policies. There's a sublimit with a couple of insurance companies, but usually mold is not covered. If you live in an area that is subject to a wind deductible, usually houses that are near the water, there is a higher deductible for those. And then trampolines, a lot of people have trampolines, and some companies allow them, some companies do not. So this becomes a problem because we have some carriers that will write trampolines and some that will not. And if you have it and you're with a carrier and they find out about it, they'll want you to remove it because of the claims that can happen with trampolines.
It's a liability nightmare.
Correct. Yeah. So another example of exclusion is oil tanks, particularly in our area, Warwick. We still have a lot of homes that were built, and have oil tanks, even as new as the early 2000s, underground. So if the tank leaks, there's a pollution exclusion for oil tanks. So we've gotten that call as well. We have had a couple of companies do pay a little bit of coverage. It really depends on the situation, but there generally is an exclusion with most carriers. And then the last one here is home vacancy. We get this call quite often. So if someone moves out of the home or they're no longer in the home and the house is now vacant, the policy needs to be changed. It cannot stay on a homeowner's form because you're voiding coverage. It's meant for the named insured or the insureds to live in the home. So basically it needs to be changed to a different policy. So I know a lot of realtors probably have run across this where now the home is vacant, and it should really be changed to a different form so that the insured, the potential insured, whoever is not in the house, will have the correct coverage in the event of a claim.
Hey, Michelle, I want to just go back up and offer a thought on the mold.
Yep.
Where a lot of companies, throw in a certain amount, right?
Sublimit,
15,000, 20,000, 25,000 of mold coverage. But carriers are really, really sensitive to mold and water damage claims that can give rise to mold. So one thing that the realtors might want to know and understand is that if you're selling a home, let's say, that has a couple, 2, 3 water damage type claims in the last 5 years, this can be an issue for placing coverage. I mean, can you talk to that just for a second, Michelle?
Yeah, I mean, if they see the claim history, they look at the water losses as an issue, but usually if they're a prior owner, they don't get affected with the new person buying the house. It's a current client, current owner that has the problem with the water losses, because if you have too many water losses, then the company's going to non-renew you. But we can, as a new client buying a home with the water losses, we can explain they were the prior owner. So we're okay with that, Garrett, as far as,
Good.
Yeah.
Good.
Okay.
Yep.
Okay, so flood insurance. So flood is a general and temporary condition where 2 or more acres of normally dry land or 2 or more properties are inundated with water or mud flow. So homeowners policies, as I mentioned, do not cover damage caused by flood. No home is safe from the devastation of a flood. You can not be in a flood zone and still have flood insurance. It's a good idea to have flood insurance because you just never know. 25% of flood losses occur to homes outside of a high-risk area. Just 1 inch of water can cause $20,000 or more in damages to your property, so it's pretty substantial. A standard flood policy pays for direct physical loss to your insured property up to the replacement cost or actual cash value of damages. The average homeowner's flood insurance is pretty inexpensive if you're in a preferred zone. It's $500 per year. So it's not too expensive to have it. If you're in a flood zone, of course, it's going to be more expensive.
Yeah, hey, and one note on that is that we just recently got a new carrier on board that we're just testing out now, Neptune, and they write with carriers that can really deviate nicely off of the normal FEMA rates, so the National Flood Insurance Program, should I say, NFIP rates. So just want to throw that out there.
Yeah, great. All right, so now we're going to talk about business in the home. So more and more people are working out of the home, doing businesses. Examples are like, Avon, Mary Kay, Pampered Chef. There's tons of businesses that people are doing from their home or side businesses. From an insurance standpoint, there's minimal to no coverage of a business venture in a homeowner's policy. So it's very important that if someone has this going on or someone that's doing this, that they talk to their insurance company to make sure they're covered properly. The liability coverage limits are limited for a business venture. You're not going to get coverage to extend for business. It's a separate policy. Property coverage limits are limited to $2,500 for business personal property. And more importantly, if you're using a detached structure for business storage, the personal property that you're storing in there, it basically makes the detached structure excluded because you have business personal property in there. So you want to really make sure that you have the correct coverage. And I know, Garrett, you probably can touch upon that a little bit more.
No, I've got a very personal situation there where my now grown son, we have a detached 2-car garage that we ended up remodeling into a studio for my 2 sons. They're both interested in music, and my oldest son, really went very far with music, is now a music teacher, and utilizes the studio for a bit of business, right? So we had to modify our homeowner's contract, endorse it to make sure that, that was covered, talk to the underwriters about it, because, if we did nothing, and by the way, he had to buy a business business policy as well, for his exposure up there. So there's just a multitude of situations, and we've been involved in some tough claims where we didn't know that somebody was utilizing another structure. I go back a number of years now for the last one that I can think of, but we send out, we're very dutiful in sending out every other year. We send out a very, very robust questionnaire to our insureds, to try to gain information on any changes, what's going on, that sort of thing. But they had a loss. These folks I'm talking about had a loss in their detached garage, and he was a contractor actually that was storing stuff there, and it was declined. It was So anyway, it's something to be very, very aware of.
Okay, so on the same note, you have young kids who are looking to make money right now. Snow shoveling, landscaping, lawn mowing. My son's 15. He's lawn mowing around the neighborhood. It seems harmless, right? But at what point does your homeowner's insurance coverage end? So basically, there's a limit on what young entrepreneurs can make. It's $2,000, which is considered, anything over that is considered a business, and then whether or not liability would be extended, which it would not. So you really have to make sure that what they're making is limited, even though we all know that kids want to make money right now, especially now. So that's really important to talk to your agent about what kind of coverage you have, especially if your son or daughter is making money and it goes over the $2,000 limit. Gary, do you want to add anything, or you okay?
No,
Okay.
no, you covered it, and it's again,
Okay.
it's exposure that's out there. That's numerous people are doing, and maybe just strictly unaware of the limitations. So it's really important to talk to your professional agent, about these things, and people just don't think to do that. Yeah,
Okay.
sometimes we're the last to know.
Okay, so the last item I'm going to talk about before I pass it over to Brianna is high value items on a homeowner's policy. So we get this call quite often. There's a lot of items on a homeowner's policy that are limited for theft. Jewelry is one of them. Depends on your policy. You can buy some buyback coverage, but typical homeowner's policy, jewelry is covered up to $1,500. Types of high value items are jewelry, furs, guns, coins, watches. There's certain limits for those items. So you really want to schedule anything that is valuable. And I mean schedule, there's a charge to schedule it. You would get an appraisal. So if you have a diamond ring that's worth $10,000, you would want to schedule it, and it becomes all risk coverage, which means if you're wearing it and the stone falls out, you can't find it, it's covered by scheduling it. Prior to doing that, it's not covered. So we've had calls where, clients haven't had it scheduled, and of course we've asked the question, and they're very upset because of course they don't have coverage. And so it's very important to talk to your homeowner's carrier about scheduling valuable items.
Yep, my wife lost her stone many years ago, and because I'm shoemaker's son, I had it covered properly, so we had coverage.
And with that, I'm going to turn over to Brianna.
Good morning, everyone. Thanks for having us. So the first topic I'm going to talk about is fallen trees, which is pretty fitting considering Isaiah's coming through last week. So are they covered or are they not? This coverage can be a little bit confusing, and it's actually going to be the opposite of what you think. So if your neighbor's tree falls and into your yard and hits something, hits your house, hits your shed, hits your fence, it's actually your homeowner's policy that's going to pay for it. And it has to hit a covered structure. So like I said, your home, a detached garage, a shed, a fence, a pool, something like that. If it just falls into your yard, there's no coverage for that. And most policies have very minimal coverage for the actual removal of the tree. It's about $500 maximum. Some policies have $1,000 max limit, but there's still a limit of $500 per tree. The only way that you're going to have coverage for the tree removal, if it doesn't hit something, is if it falls and blocks your driveway. So the only time we've ever seen a company pay out, let's say if your neighbor's tree falls and you don't want your insurance to pay for it, you would have had to notify your neighbor that that tree looks dead, it's rotting, something's going to happen to it. You would have had to notify them in writing so that we could prove that you warned them and you asked them to take the tree down, and they didn't. If it's just a normal tree that falls because of a storm, it's your policy that's going to end up paying for it.
Yeah, if I may, Bree, too, if we've had situations, and I want to clarify that, tree comes down and let's say hits your shed, whether, let's say it's on your property, right? You have a tree that comes down and hits your shed. The company will pay the amount that it takes to remove the tree from the shed. But let's say it's a 50-foot tree, right? And so they'll pay for the amount to actually remove that from the shed. But then the remaining amount, the remaining tree, if you will, that you still have to get cut up, and that's where the homeowner's policy is not going to cover. As crazy as that sounds.
Okay, I think we're good for the next slide, John. All right, so personal liability. Kids these days, in the age of social media, kids are posting anything and everything all over Twitter, Instagram, Facebook. And what a lot of people don't realize is that if your child posts something inflammatory on the internet, you can be brought into a lawsuit. So it's important that you have enough liability coverage on your policy to get that taken care of. Another liability exposure is going to be your animals and your pets. Sure, most of you know that a lot of companies have what they call a dog list, and it's going to be your typical, what is considered aggressive breed dogs that are not going to be, company is not going to write insurance with those dogs in the household. So that's your typical pit bull, Rottweiler, Doberman, Akita, and it varies from company to company. Some companies' dogs lists are very long, others are pretty short and are your typical dogs. So it's best to talk to your agent and let them know exactly what's going on so that they can figure out what company is going to be the best fit for you. Drones are a huge question mark in the insurance industry. I don't think we represent a single homeowners carrier that will cover them right now. They're considered an aircraft, so there's really no coverage for them, and that can also be a liability concern, a privacy issue. You're flying your drone, taking photos, and you're over somebody else's property. It's an invasion of privacy, which can also be considered a huge issue. So that's why we are always going to suggest an umbrella policy. So an umbrella policy is an excess liability policy that goes over and above the liability limits on your home, your cars, any toys like boats, RVs, motorcycles, ATVs. And it's important there, it go in $1 million increments. We have companies that go up to 10 million, and then we have excess carriers that can go even higher than that. So it's important to take into consideration any cash you have on hand, like in a checking and savings account, any investments, 401ks, IRAs, investments, any future wages, any escrow you have in your home, total all of that up. And if it goes over what your typical homeowner's policy is going to cover, which is $500,000, then it's definitely worth considering getting the umbrella policy.
Hey, I'll just a couple things I want to piggyback on that. The umbrella policies nowadays are indeed also, you know, kind of excess liability, if you will, right? So a common misconception is that you get an umbrella policy and, oh, it's going to pick up everything, right? It's an umbrella. It's going to, you know, it's going to pick up those things that are not covered under the homeowner's liability, let's say. You know, that's not true. The umbrella is really an excess liability policy for your underlying liability exposures, which are your personal liability and your auto liability, let's say, liability that you have for recreational vehicles, that sort of thing. And one other thing, or two other things I wanted to say was that personal injury, correct me if I'm wrong, but not all companies just simply include that. We always include it. We enhance any homeowners that we provide a quote for. It's peanuts. Like $10, right, to extend personal injury coverage, right? But there's a lot of carriers out there that don't automatically include it. So it's important that, you know, that you check with your agent and make sure that that coverage is included and expanded under the personal liability realm. And then on the drone situation, there are companies out there. There is a market out there now that will write coverage for drones. It's not inexpensive, but there is coverage out there.
Okay, so the effects of multiple claims on a home. If you have too many claims, your carrier can cancel you because they're going to consider you as high risk. There's too much risk in keeping coverage on the home for them because they've paid out too many claims. It can be considered that you're not taking proper care of the home. Most companies look at a 5-year claims history. We have one or two that will look at 3 years or 39 months, but the majority are going to look at a 5-year claim history. So we are always going to recommend that you self-insure up to $1,000, so $1,000 deductible, meaning that if you've got a claim that the total payout is going to be like $1,300, we're going to recommend that you don't put that claim in, because after you hit your $1,000 deductible, you're going to get $300. But that's still going to be a claim that's going to could count against you in the future. So we would always recommend nothing lower than a $1,000 deductible on a home.
Yeah, and oftentimes now we're going. I mean, if you know, we're dealing with homes around here that are $600,000, $700,000, $800,000 in value, and we're we're suggesting that save some premium dollars, buy up to 2,500 or even 5,000 if you can handle it financially. Insure to value, that's the most important thing, right? Make sure that your home is insured to value, 100% of value, in case you have that, that awful situation. And this ties back into, if I can revert back, the reason that people have a difficulty with insurance is that so few people, around 7%, have a claim that can really hurt you. That where you feel pain, right? And so most people go through years, decades, paying their insurance premium and never having that serious claim, right? So this adds to how people feel about insurance, I think, right? They pay, I paid all these premiums for all these years. So, we definitely recommend, listen, make sure that you insure to value for that, that terrible loss that you might have, but self-insure those small ones, if you can swing it. There is sometimes a significant savings in premium, right? To go from, a 500 or 1,000 to a $2,500 deductible. So I think it's wise counsel. Okay,
Go to the
John.
next slide, John. So home hospitality services is also another hot topic that I'm sure you all run into a lot. So your Airbnbs, HomeAway, VRBO, things like that. Most companies are not looking to entertain this sort of business because that's what they're going to consider it right now. The few companies that do, it really varies on the situation of how they can cover it, if they will cover it. It depends on the length of the rental, whether it's a limit of 12 weeks out of the year, 90 days out of the year, or how much is being rented. Is the whole house being rented? Is it one room? Is it your primary home? Is it your secondary home? It really varies from company to company what their stance is. So when it comes to the home hospitality services, it's definitely better to let your agent know exactly what your plan is so that they can find the company that's the best fit for you, just because there just are so many rules and guidelines that need to be followed that vary so greatly from company to company.
Yeah, that's another one that is going on a lot around that agents probably don't know about. And it's a bit frightening. So if you got folks that are looking to do that, make sure that they reach out to their agent and have a discussion with them. Make sure they're properly covered.
Okay, so does credit score affect your premium rate? It does. What we see on our end is just a tiering, like a letter score. One of our companies literally goes from A to Z, A being the best, Z being either no score or a no hit, meaning that you could, if you have a credit freeze, which a lot of people do now because of the Equifax breach and things like that, you can call one of the 3 credit agencies to release that freeze just for 24 hours. And then we can rerun it again to see if we can get the best rate for you. But it definitely does have an effect. We don't see the actual score on our end. We just see a letter score based on the company. So now that we've got all the bad things out of the way, we can end on a positive note, which are all of the ways to save on your homeowner's insurance. So a list of all of the discounts that are available. So you've got your new home discount. So if it's a new build or if the house is, I think usually 20 years old or newer, we get the new home discount. It varies based on the age of the home. Claims-free discount. So like we said, you're good about not putting too many claims in. You have the advantage of being able to get that claims-free discount. Retirement credit, this varies from company to company, but if you are retired, one or both you and your spouse are retired, some companies offer that retirement discount. A longevity discount is not something that you're going to see actually printed on your policy, but once you've been with a company for a long time, you do get this longevity credit for being with them for a long time. So we would always recommend keeping that in mind before you think about changing companies too often. You've got your alarm system credit, so like a central station alarm or even a Ring alarm system. A lot of companies are offering credits for those now. Fire extinguishers and smoke detectors, any home improvements like updates to your roof, your plumbing, your electrical, things like that. Generators, whether hardwired or portable, some companies offer discounts for both. Again, it just varies. You get a higher discount for your hardwired generator, a lower discount for the portable one. Water detection and automatic shutoff, a non-smoker discount, and then of course the multi-policy discount for packaging your home, auto, and as many lines as you can together with the same company.
And that can be significant, right? That can be up to 15% on both lines, right?
Sometimes even higher. Yeah.
Even higher.
Yeah.
Yeah. Usually around 20 on the home.
Yep. Also makes it easier to have to get an umbrella policy. A lot of companies now, they won't write the excess liability, the umbrella policy over somebody else's. Some will, but most companies want to control both the personal liability on the home and the auto liability in order to write the umbrella policy. So,
right.
Little tidbit. So, I guess we've come to the end of the presentation. I have seen a lot of activity and questions popping up on my screen, so I thank you for that interaction, everybody. And we'll try to. Oh, look at this! Jonathan's been busy here. You might have to make that a little bigger, Jonathan. I don't know.
Absolutely, sure.
Yeah.
So we were able to gather up all the questions throughout the last half hour for you, and we can address these. And then any other further questions you all have, please feel free to unmute yourselves and ask away.
All right. So why don't we address these? We'll address these first. So I had a big tree all the years in store. The tree removed and the doctor's car, it was still drivable. Tried to get money from me. Yeah, they can try, I suppose.
Yeah.
But again, if there was no prior notice, right? Prior notice is a big factor in municipality laws and that sort of thing. But it holds true here too. The other thing that a company could do who's paying for the loss, right? Whether it be the automobile carrier, and they may try to subrogate back to your insurance carrier. But whether or not they're going to have success or not is questionable on that. So special coverage for homes. Yeah, go ahead.
The homeowner's policy is really, it's not going to pay for damage to a car, whether it was your car or somebody else's. It's going to be the auto policy that pays for that. So
that's right. There's
really no way for your policy to pay out on that unless they had, like Garrett said, they had prior notification to you that tree needed to be taken care of.
Yep. And that's comprehensive fire and theft or other than collision coverage on an automobile policy. And that's probably the broadest coverage in the industry, right? That's like, that is one of the broadest coverages, and that's going to pick up that, now. They didn't have that coverage. It's a doctor's car. I assume that they had physical damage coverage on it. It was a newer car. But, if they didn't have physical damage coverage, then you're just going to have a very upset person because, as Bree says, they're not going to be able to come back. Special coverage for homes older than 75 plus years. I'll ask you guys to jump on that. I mean, with the one thing about, ordinance or law coverage, right, which is very important on older homes, which I can just touch on. So if you've got an older home, right, ordinance or law coverage is built into a homeowner's coverage. You can increase it, which is sometimes highly recommended, for an older home. And by the way, older homes, normally companies want to see updates, right, to the roof, electrical, heating, plumbing, they want to see those updates, right, where you can then get some credits involved. But older homes, ordinance or law coverage really comes into play where if if you now have to replace after a loss, you have to do things to the home because of local ordinances or laws that the older home doesn't have right now. It's additional coverage. You want to make sure that you have that ordinance or law coverage, embedded in the homeowner's policy, and that's all over the map. Some companies, include a decent amount. Others, you want to talk through that with your agent and raise the bar on that coverage.
And if I jump in here, not to mention some of the older homes too, where we talked about replacement costs. The replacement cost is going to be higher because of the builds, and so you might be surprised to see where that comes out at. You might buy it for one number, but the replacement costs will be a lot higher because it is an older home. So that's typically true. We see that in older homes. So and unless you're insuring that, if it's a really older ornate home, right? You've got plaster moldings, you've got some really special features of the home, then you might want to be talking to a client about a Chubb, which is kind of a very high-end company that they are going to value that home very high, but they're accurate. I mean, they're as to true replacement cost. They're going to actually restore a home, whereas a lot of companies, it's like kind and quality, right? So you're not going to get that that same kind of replacement on an older ornate home. So. Okay, Devona says, does a pollution exclusion relate to underground only or above ground too? Yeah, it's underground, right? Yeah, I mean, I have never had a claim yet where the in-ground, in the basement has leaked, but from what I know, it's underground only.
Yeah. Oh, yeah, interesting. Well, I mean, I'll just offer this. Flood insurance has gone up exponentially over the last couple of years, and the expectation is that it's going to continue to go up because the program, the National Flood Insurance Program, is incredibly underfunded. Because of the increased activity of floods. I mean, Irene and Sandy back in 11 and 12, forward, there's just more storms, right? There's more exposure, and the program itself is it needs money. So my understanding is that they're still looking at double-digit increases for the foreseeable future in that program. So it's not going down. And Virginia also asked what would cause some homes to have very high flood insurance premiums. Oh, I'm going to let one of you guys take that.
Are they in the same flood zone? Because it is possible that one house and even the house next door could be in different flood zones.
No, they are, and it's a new construction. And I was wondering, because I'm new in the real estate business, and I'm getting the feeling from older people in the business that it's almost like they're shying away from houses with flood insurance. It's almost like a major no-no now, and I really need to know this, for my prospective buyers. And this particular home had a flood insurance in Throsneck in the Bronx, where insurance is low, period. It was in the thousands. And the houses around there, they were in the hundreds, yearly flood insurance in the hundreds, under 1,000. And this particular new home, the insurance was almost $3,000.
It might be worth looking into an elevation certificate, because that proof that house is not necessarily lifted, but is above a certain elevation can decrease that premium. But as far as being a new construction, it's definitely wouldn't be the case that that property is high risk, because if it's new construction, then that wouldn't be the case.
Thoughts,
Okay.
Michelle?
I was just going to say, if you want to give us the address, you could email us. We could do some research Sometimes part of a property is in a flood zone and the rest of it's not. And we've had success where we can actually get the flood insurance, not in this case probably, but where we can get it waived depending on, how the property
Yeah,
sits.
if it's just like the property and not the actual home that's in the higher risk flood zone, we can usually fight that.
Right.
Okay, wonderful. Thank you. I'll do that.
You're welcome.
Yeah. Yeah, and the next question I read ahead, and flood is a very specific definition. So what you're talking about, Toya, is burst pipes, frozen pipes, running water. You leave the water running in a bathtub. We've had those. That's not flood. That's water damage. That's covered. That's covered under a homeowner's policy. So different just semantics there. A flood is really defined. I should know what the definition is, but it's ground.
We had it in the slides.
Oh, did we?
Yeah.
Yeah,
Yeah.
it is a
2 or more.
general and temporary condition where 2 or more acres of normally dry land or 2 or more properties are inundated by water or mud flow.
Yeah. Yeah. And then, should you have business insurance if you have a home office but don't meet clients there? If literally you have no exposure, I mean, if you have, it's a home office and you're not generating, dollars because of that home office, then, probably you're okay.
You can
Yeah,
add the home office. There's a home office endorsement.
very, very little money.
Yeah. So I would
Yeah.
definitely recommend that. It's probably like $30 a year to add the, coverage for the home office.
Yeah, and the limitation on property, was it 2,500, 2,000, 2,500?
2,500.
So I mean, yeah, chances are that's going to cover the property, the business property that you have located in that office. But I mean, if you have $10,000 or $15,000 worth of business property, then you want to address that. So, does notification in writing go for city, county as well?
Are you
Jonathan?
talking about the
As far as trees?
trees?
Oh,
Yes, it was regarding the trees when you were stating to notify the neighbors.
yeah. I would say again, prior notice. Municipalities of all shapes and sizes live and die by prior notice. So, if there's no prior notice, then they're not responsible. You have
Right,
a
and
thought there, Michelle?
We
Yeah.
recommend, certified, so you have proof that you sent it, too, certified letter, not just regular mail, because then they're going to say they didn't get it, but you have the proof if you send it certified, of course. So that's definitely the way to go.
Yeah. Yep. And Nancy asked a good question. So if neighbor has a fire, there's smoke damage to your home, or let's say God forbid the fire leaks, that sort of thing. Again, first party coverage is going to come into play. Your homeowners is going to respond to that. Now, they may try to subrogate against the original cause of loss. As to whether they're going to have success on that or not, I don't know. I don't think I've ever run across that situation. Michelle, have we?
No.
Yeah.
Not at all.
Yeah, but your homeowners is gonna provide the coverage for that. Again, if the circumstances are such, that the company may try to subrogate back against the homeowner's carrier of your neighbor. Does it affect landlord's homeowner's policy when the house is rented? Kelly, do you want to just expand on that question? Does it affect landlords?
Oh, it's continuing the bottom. What if
Oh.
yes, renter?
Renter's insurance.
Well, it's going to be
Yeah.
a separate policy. It's not going to be a homeowner's policy
Correct.
for the landlord, unless it's like a 2-family home. What is there a specific situation that you're thinking of?
Oh, pardon me. Did we lose Keller, or you have your are you muted?
Hear me now?
Oh, there we go.
Yes.
I was just asking a simple question. If a house is rented, does it affect the homeowner's, policy? Like, I know that like when a house is vacant, it is a problem. But when they rent it out, let's say there's a fire, when there's a tenant, whose
Okay.
policy?
It's a different form, so it can't be a homeowner's policy if it's rented out. It's a landlord's policy, so it should be written on a different form. So then it would be the correct coverage, and then the tenant should have a renter's policy as well.
Yeah, we recommend to those that are have dwellings that they rent out to others as investments, or whatever.
Right.
That they put in the lease, actually, that they're required, the renter is required to have tenant homeowners coverage, and that will cover the tenant's belongings, their contents coverage, right? But if there's a loss, your dwelling fire policy is going to pick up coverage to the building.
Correct.
So are you saying that he needs a homeowner's insurance policy as well as a landlord's policy?
Or yeah, landlords or dwelling fire, they're typically called, right? So the homeowner's policy is not the correct policy if you're renting the house out.
Yeah, homeowner's policy means you live there, right?
Yeah, it has to be owner occupied.
Owner occupied. Yeah.
Got it. Thank you.
Yep, sure. And then as far as the note on co-insured, right? So we get this all the time, right? Personal tenant homeowners or personal homeowners coverages are not going to extend additional insured from a liability standpoint, right? So you can't ask a tenant homeowners to add you as additional insured. Carriers, as far as I know, you guys jump in. As far as I know, they're not going to do that.
No, they won't do it.
No, they won't do it.
Right.
The only time we've seen them do it is if it's almost like a homeowners association property management situation, but it's not something that it's something that we would really have to fight for. But as far as just being like a landlord in a personal name or even an LLC, they're not gonna do it.
Yep. Okay, I see some other questions popping up, Jonathan.
Yeah, so again, we invite anyone to unmute yourselves as well if you'd like to ask the questions verbally. But
I have a question about landlords. What kind of problems do you often come across that most landlords for rental policies are either underinsured, or what situations do you see quite often that you would suggest landlords to be careful about?
Well, particularly if they have dogs or trampolines, those kind of exposures it's attractive nuisances where the homeowner's carrier for the landlord's policy might not want those. So those two come to mind right away. Bree, do you have anything to add to that?
No, I think that's
basically, if you have a dog and it's maybe a dog that's on the hot list, and we have clients that get dogs later, and might not be the dog that company wants to know about. So those are important things to make sure that don't happen.
Yeah, keeping track of that, and I'll repeat myself as far as your tenant goes. I mean, having a good lease in place, obviously, and making sure that they are providing themselves with proper tenant homeowners coverage is key as well. Yeah, you want them to have, and you could even specify that they should carry at least $300,000, let's say, of personal liability. So if something happens, they have a guest in the house and maybe they slip on the steps and they decide to sue everybody in sight, that the tenant has some protection there as well. And it's not just falling on your dwelling fire policy.
Right.
Yeah.
Just to follow up to that, do the landlord policies often or never or ever provide maybe payment for damages? Let's say the tenant creates a huge mess. I mean, some tenants leave the place in a really, really bad situation, holes in the walls and carpet, all nonsense, whatever. Do those policies ever provide for damage done by tenants?
Yeah, we've had those claims before. I mean, it can be considered vandalism, and vandalism is covered as a covered peril under the policy. I
thought that tenant's damage is not considered vandalism, that if your tenant did the damage, then it's not considered vandalism.
No, it depends. It really depends. It's a bit subjective, right? So it depends on what kind of damage. If it's normal kind of wear and tear type stuff, they got a couple of small holes in the wall, you know, that sort of thing. I mean, that's just normal. But if they go through and like that situations where you know, tenant is leaving mad and sabotages, you know, toilets and sinks and takes bats to, you know, various things, and you know, that's vandalism, and that would be covered under the dwelling fire policy. So it really depends on the exact circumstances. Yeah.
So Garrett, Michelle, and Bree, Eric has a question about primary and secondary home and how it affects the type of insurance or policy that you would get, or does it all fall under homeowners?
Good question.
So if you have a primary home or in a secondary home where you reside in the two homes, one's your primary, one's your secondary, it's still a homeowner's insurance policy. So you reside in one, say 6 months, and the other one 6 months, it's still a homeowner's policy. Do you have a specific question besides that? Did I answer that? Okay, I see his response.
Great. Thank you, Eric.
Another question as well from Nancy. I'm sorry, go ahead.
Oh, it's Nancy.
Oh, hey, hi, Nancy.
How do we know if our home is insured to the current value? How can we verify that?
Okay,
So,
so
homeowner policy, yeah.
Your current policy, your agent, whoever that is, should be running the replacement cost through the software system that I think all insurance companies use that I'm aware of. So you could be underinsured if you've done, you know, renovations or you've added square footage. So it's important to look at that. You know, also we have a book of business that's been on our books for quite a while. We've seen where the homes do get out of whack, where you could be overinsured because they keep they have a coverage called inflation guard built in. So it adjusts every year by approximately 4%. So that does happen too. So it can go either direction.
Got it.
That's right.
Okay.
That's right.
Okay. Thank you.
You're welcome.
Sure.
Now, Nancy Keller also asks, vacant homes that is a temporary home due to extended hospital and rehab stays, does the owner need to get a different insurance policy?
I'm gonna throw this out, Michelle. I don't know if we've ever had that specific circumstance, but it would seem to me, again, you want to, you know, you want to converse, you want to, of course, engage your insurance agent on that. Right. It would seem to me in that situation that we could talk to an underwriter at one of our companies and kind of make an exception on that.
I agree.
Yeah, I mean, I think most of our carriers are pretty good about extenuating circumstances like that. And as long as we make that contact with them, we have that understanding of what's going on, and we say, listen, we'll stay on top of this with the insured, that there would not be an issue. I can't speak for, you know, all companies, but I like to think that our primary, you know, 6, 7, 8 carriers would be reasonable on that.
Yeah, I agree.
Yeah.
Now, before we lose Eric's question at the top here, he asks, if an underground tank rusted out and an oil company continues to fill it up and cause an underground spill, is the oil company liable, or is the landlord still negligent? Let's say for a commercial property and it leaks into a pond and the DEC requires remediation, etc.
Yeah, man, oh man, that's a loaded question. You know, you would think that an oil company would be awake to the fact that maybe they're pouring. I mean, if it's really gotten that bad, you know, how much fuel are they pouring into that tank? You know, I mean, if it's leaking out. But those types of situations, man, you need specific pollution liability coverage, and again, and that's available. I mean, you know, you can buy pollution. It's many companies now writing pollution liability, but they want to know the information on that tank. You know, is it 50 years old and it's single walled and it's metal? You know, you're not going to find coverage on that thing. They're going to say, get that out of the ground. So tough question to answer as to whether that would go back on the oil company. It would really depend on, you know, how long they were putting oil into the tank, and were they monitoring, you know, how much oil was going in, how often they were having to fill it up. You know, I mean, there might be some culpability in that situation to go back after them. But anybody who's got an underground oil tank, you know, is just got to be very, very wary, because they're just they're a bomb waiting to explode. You know, and it's amazing around here, right, how recently, you know, homes are being built still with underground tanks. I mean, as you said, up until not that long ago.
Right.
Yeah. So I can't really specifically answer that, but hopefully I helped you a little bit.
And Garrett, you're going to love this question as well. Toya asks, how often should you reevaluate your insurance policies?
You know, so again, what I mentioned before was every other year we send out a very robust questionnaire, and I will say it's unique in our industry. I mean, there's not a ton of agents or companies that do that. We have a 2-page questionnaire that goes out for homeowners and automobile. We don't do it every year just because it's a little much, right? But and of course, when we are writing a new business policy, we go through, you know, the same kind of list of questions. So we want to get as much information as possible about a prospective client. So we're doing the right job. We're counseling correctly. So I would say, you know, I mean, I would say every couple years, certainly reevaluating your home value, you know, maybe once every 3-4 years is probably a good idea to do.
Okay, and Toya also asks, should you purchase flood insurance if you have a small pond in your backyard, but you're not listed in the flood zone?
It's a good question.
Yeah, I mean,
it's a good question. I mean, if you know, I'm sorry, Michelle, if you understand that flood is not covered under your homeowners, you know, and you're willing to roll the dice, then, you know, you roll the dice. If there's been any type of creeping of that water from your pond, depending on how long you've been there, if you know from neighbors or history, if you're buying the home, you know, that, you know, yeah, that thing is, you know, is crept up, then, you know, you might want to consider purchasing it.
I mean, if you're not in a flood zone, the minimum premium on a flood insurance policy is around $500 for the year.
right.
And we don't see that premium changing too much just because it's so low already. So it can't hurt.
All right, and Carol asked if we're going to be getting a link to this recording, and Mary did actually record this entire presentation, so she'll be able to send the presentation to all those that attended and all those that signed up as well.
Wonderful.
And thank you, everyone. I think this was an excellent presentation. I know I learned a lot, and I hope you all did. And if you have any questions, of course, you can direct them to myself, or you can direct them to Jonathan. And I will be, after this, you know, putting the recording together, and I'll send it out to everyone who registered for this. But thank you, Garrett, and thank you to your whole team for a great informative presentation today.
Oh, thank you very much. It was great to
Thank
be
you.
here, and we'll hopefully talk again soon.
Great. Okay. Thank you so much, everyone, for attending, and go out and have a great day. It's a beautiful day out there. Enjoy.
Thank you.
Okay. Bye-bye, everyone.
everyone.
Bye-bye.
Bye.
Bye-bye.
Take care.